Hello guys and welcome back to another class of our course about the complete introduction to Forex trading. So in today's class we are gonna talk about, we will continue talking about technical indicators, and in this case, right now we're gonna talk more about price action and the price movements of the chart, more than just indicators. So the first thing we are gonna talk about in this course will be support and resistance and key levels. So how you can trade a chart and make a price analysis without even using, let's say, indicators or fundamental analysis. Well, one word, well, two words actually, price action. And how this works, well, you will see it's very subjective. Uh, each person trades can trade this very differently, but and can place its supports and resistance at different places. Once again, I'll explain you how it works. All right, so the first thing you guys want to do is open up your chart and find out a place, I don't know, where you can definitely see that that's a high. So for example, at this place here. Here I can place one of my supports. So support will simply be the highest price that I'm willing to, let's say, that I think the price will go in the near future. For example, from a day trader, I think that the highest price that this currency will reach will be the price right here. And the same thing will go for, let's say, our resistance. So the resistance is simply the lowest price that a price can go in the near future. Key levels are levels where you have those are levels of support and resistance, and those are levels where you have at least 2 points that are together. So for example, let's say I want to draw another support. So it's going to be here, and I have a key level here. Why? Because as you can see here, I have 3 points that are that are tested. So in this case, let's say I'm in a situation. Let me just zoom on it. Let me come back what I was. All right. Here. So let's say, for example, you are here. As you can see, the price has tested once, twice, 3 times. So if, for example, you are in a situation like this, you can use this point as a key level or a level of support. Yes, it has break the support, and normally when it breaks the support, you close your transaction. Another thing that I haven't really talked about in the past courses that I should have talked about in our past courses is the take profit and the stop loss. So in trading, you can, when for example you open up your transaction, let's say you open up a sell order here, and you want to place, you have a certain amount that you are willing to risk. Let's say you are ready to risk 20 pips on your trade. So your stop loss will simply be 20 pips higher. So you will open up your trade and you will write down 20 pips on your stop loss. So let me just show you where is it. So we have our market watch, and let's say you want to open up a trade. So you click on new order and it's going to be here. So let's say, for example, I want to place my order at this price. So I'll write down my price. So in this case, it's going to be a pending order. I want to open up a sell limit, and it's going to be at 1.9. So what's going to 1.09, sorry. So this means that my price, my broker will open up a trade at this price. If I place, let's say, my stop loss at 1.095, this means I'm ready to risk 50 pips on my trade. So let's say I place a trade on my support here, and my stop loss is 50 pips higher. So this means I'm ready to risk 50 pips on my trade. So this is for take profit and stop losses. So let's come back to our support and resistance and key levels. So as I explained to you guys, key levels are simply levels where you think there is enough connections between, let's say, points, and where the price tested more than one time and haven't broken that level. So for example, it could be here. So as you can see here, for example, we can have a key level. So somewhere here, we have our key level because the price tested, but never broke this level. So you can just place your key level here once again, and then finally it goes up. Same thing here. So it tested, and if, for example, you are here, you can place your key level somewhere there. this is on the very, very short term, but it can also go on the long term. So normally when you make your Forex analysis and you want to place your supports and resistance, what I personally do, I start with higher time frames. So I will start with, let's say, daily at first, and I will place my key levels. So you can, but if you want to practice putting down your key levels, the first thing you guys want to do is start with a higher time frame. So you can go on a daily time frame or a 4 hours time frame, and then after that simply put your key levels. So you zoom out, you find the lowest point ever, or the lowest point in the near future or past, and you simply put your levels. So you know that the price will almost never cross this price right here. Well, it's the lowest price for a high period of time. Then you can place your supports at other places. So as you can see, we can find out different key levels. So for example, here we can have a key level. As you can see, we have the price has tested here, here, here. It tested here. Other places we can have a key level here. As I said, it's something that is very, very objective, and it's just a way for you guys to be able to place your support and resistance. So let's say, for example, you open up your trade somewhere here, your stop loss could be there, and your take profit could be at the next key level that you find that out. Once again, it's very subjective. There is no perfect way to do it. You can do it with the big time frames, then small time frames. So when you make your analysis, the first thing you want to do is put on your key levels on higher time frames, then come back on lower time frames. So if you started with a daily, you can come back in an hourly time frame and do the exact same thing. So you simply zoom out, and then you find out the highest prices. Well, start with the H4, and you can just find out the highest prices, and you simply do the exact same thing. And at the end, you will have different key levels that you will be able to work with. So you start with the D1, so daily time frame, then 4 hours time frame, then you can go back to 1 hour time frame, and you will be able to have a lot of support and resistances. And as I said, this is a good way to start, to have a graph and to know exactly where you can place your stop loss, your take profits, and those are also good points, as I said, as reference points to be used to enter a transaction. All right, so this is for support and resistance. The next thing we are gonna talk about is Fibonacci. So Fibonacci, how it works. So once again, you will see it's very, very subjective. Normally, how you wanna use a Fibonacci is gonna go, you will go on insert and simply click on Fibonacci here. You'll use the retracement. So you will take the highest point ever and come back to the lowest point ever if you want to open up a sell order, for example. So theoretically, when you have a Fibonacci, you want to enter the trade somewhere around 61.8 because those are key levels for Fibonacci. So as you can see here, for example, I did it there, and one of my points, one of my closest points, the point of reversal where the trade really came into execution, was next to 61.8. So as you can see, this is an amazing place where I can take my trade. So I could have took my trade somewhere here and places my stop loss somewhere around 61.8, which could have been great. So the Fibonacci, technically what it does, it simply gives you some key levels simply by you tracing a Fibonacci on the support and on the resistance. So on the highest point and the lowest point. So we can go and try it out on some other places. So we can simply go on the graph. Simply, let's say we are going here and we want to do it somewhere there. So let's do the exact same thing. Let's say we place it here. So as you can see, the exact same thing happens there. I want to open up, I want to find out where exactly I want to ride this uptrend. So very simple, I go from my lowest point to one of my first highest point. So let's say you are somewhere here. You go to one of your highest points and you can simply enter the trade there. You can do it the other side as well. So let's say, for example, you are starting here. You can put it down there. So highest point, lowest point. Once again, let's imagine we don't have those points. And you are looking for a place to enter. So you want to enter a short trade. If you want to enter a short trade, so a sell order, you're going to enter somewhere around this point. If you want to enter a buy order, so you are planning that the price will go up, simply do the reverse. So you want to enter at 61.8. And as you can see, you will enter the trade somewhere around this point right here. So as you can see, it gives you key levels. So you enter somewhere around this point, and then you can simply ride the trend. But once again, you need to spot if it's an uptrend or a downtrend before. But what Fibonacci does, it gives you very interesting key levels that you can use to be able to open up your trades. So everything around the price action and the chart figures as well around price action is really key levels. So key levels is really the word that you guys have to remember. So Fibonacci, what it does, as I said, it really gives you out key levels. The next thing that we are going to talk about are chart figures. What this is, those are simply chart patterns. So you have patterns, candlestick patterns that exist that usually what they does, they tell you if the price will change. So for example, if the price will go up or will go down. So one of my favorites and one that I use a lot, I will show you just one because there are hundreds of them. You can simply look them on Google. You'll see there is hundreds of them. But just for you guys to understand what is it, that's my main goal, is when there is, for example, if I want to spot if the chart's gonna switch, I simply look at, let's say, situations like this. So right there, perfect, exactly. All right, so as you can see, what's happening there, you have a small sell, you have a small short candle. So you have the candle of that the price went down, and then you have a candle of the price going up. So what's happening here? Well, the candle of the price going up is at least 75% bigger than the candle of the price going down. So here, for example, I would have opened up my buy order. So for example, here I would open up my buy order. Same thing here. For example, here, as you can see, I would open up a sell order. If I strictly stay with this strategy, here I would have opened a sell order. I would have done the exact same thing here. I would have opened up a buy order here because this candle is bigger than, is at least 75% bigger than this one. Same thing here. I would open up a buy order there. So as you understand that right now, this is what those patterns are. So as I said, there are hundreds of patterns that exist about chart figures. Some works more, some works less. But once again, one of my favorites is this one. So as I explained, you can simply try to look at it on charts. For example, here we have a clear example of it. So right here, for example, we have a small sell candle, and then we have a big buy candle. So here, for example, I would have entered my trade and I would ride the transaction. So you can try it out by yourself. If you want to look at other candles like this, you can. There is a lot of them that exist. I won't show you all of them that exist and show you examples of it. It's very simple. You simply look for them and you can try it out on your graph. This is another way, as I said, to be able to check and make a graph analysis, a currency analysis by looking at those chart figures. All right, the next thing that we are going to talk about are trend lines. Trend lines are very important as key levels, which are very, very important. So we'll just take out our key levels. So how do you trace trend lines? So let's say, for example, let's just take the beginning of this trend because we clearly have a trend here. Let's say I'm somewhere around here and I spotted that there is an uptrend. How do I spot this? Very simple. Let me just get back where I was. Right, somewhere here. Good. So I'm somewhere around there. What do I see here? If I want to spot an uptrend, what I want to spot first, what I need first, I need 2 max levels and 2 min levels. So 2 minimum levels and at least 2 maximum levels. So here, for example, what I see. Here I have, so here the price stays the same. So it tests here, it comes back up, tests, come back up, and boom. Here I have first min. So I still don't know that the price will go up. And then what I see, oh, so the minimum went from here to there. So what I can do now, I can trace my first trend line there, this way. So as I can see, the price is still going up. So the minimum is going up. And then what I see, the max is also going up. So what I do now, when I have 2 points, so a minimum of 2 points, I can simply trace my max. And from this moment, I'm able to see if that's an uptrend or a downtrend. So for example, here I had my 2 points traced, and from here, from this moment, I'm able to make my trade. So for example, each time that the price reaches this trend line, I can open up a buy order. For example, here I can open up a buy order. I can close it here, open up a sell order here, open up a buy order here. So as you guys can understand, then I can do this on, here it's gonna be a small trend. So once again, we have our 2 points there and our 2 points somewhere around here. And from those 2 points, I can find out that this is a downtrend. So once again, the more the trend advances, the more I will adapt my trend, and the more it's gonna be easier. So as you can see here, we have a small downtrend. All right, so right now, let's say we are looking for bigger trends. So we will work with the mins that are way, let's say, different places one from another. So we are on a 4-hour trend. Once again, it's very, very huge. But let's say we want to use this point as our first min and this point as our second min. We can. So each time that the trend reaches this point, we'll simply open up a trade. So as you can see what we just did, our first min is here, our second min is somewhere here, and we have maxes. So once again, our first max would be somewhere here, our second max would be somewhere here, and then we know that we have an uptrend. And from this point, boom, we have an uptrend. And if we want a confirmation, we can do it simply by going on a daily chart, for example. And as you can see, well, we have our confirmation of an uptrend. So very simple. What I want you guys to do, simply spot 2 points. Let's say I'm trying to make an analysis on today's day. So I'll go back here. I will spot 2 points. So let's say, for example, I'm here. I have my support. I have my resistance. And where I think exactly the price will go. For example, what I can do, I can simply put, here what I see, I personally see a downtrend until here. And what I'm planning of the price to happen, for example, here we have a downtrend, it comes back up, comes back down, comes back up. So we have a triangle once again. Well, here in this case, we would have a triangle. And what I'm planning that the price will do, the price will simply cross on this point right here. So as you can see, I just traced trend lines, and my goal is really to, once again, speculate that the price will do something at this point, because I traced 2 trend lines, I have a triangle, and here, for let's say, for example, for me, the price will go up. But what I'll ask you to do, guys, to practice tracing trend lines, simply spot 2 points together. So for example, you spot 2 maxes, you can simply trace a trend line. So boom, here you have max 1, max 2. Then you will have min 1, min 2, and simply trace your trend line. And simply practice tracing those trend lines. If you wanna work like more efficiently, what you can do also is do it this way. So simply take your graph, then simply bring it really far back down and advance slowly. Let's say, for example, you are here. Okay, what I'm seeing 2 mins. I'm gonna trace my trend line here, for example. All right, I'm right, because the price went up. I have 2 maxes here, so I'll trace my trend line here for my maxes. All right, I can fix my trend line, my second trend line. I can fix it because the price moved. I was right. So this is how you practice putting your trend lines, and simply advance until today's date and look if you did it the right way, and simply trace trend lines everywhere. Once again, that's an excellent way for you guys to practice tracing trend lines. All right, so right now what we saw for our course about price action, the first thing we talked about are support and resistances. Very important for you guys to do. So don't forget to practice it. Once again, simply open up your graph on a high time frame, so you can start on a daily time frame. Put your supports and your resistances. Then you simply go back on lower days, so 4 hour, 1 hour, 30 minutes, and put on your support and your resistances. After that, you can put your take profit, your stop loss. Next thing that we saw is the Fibonacci. And once again, we saw really fastly how it works. You can also practice your Fibonacci. So for example, here, if I want to trace a Fibonacci, I will simply take my first point from here to here and look at the 61.8, which is my key level to enter the trade. Next thing we talked about are chart figures. So in this case, we talked about only one, but there are hundreds of them. If you want to look, if you want to find them out on the internet and simply practice trying to find them on the graph, you can. I personally don't use them this much, but you can. It's very well. It's an important part of trading also. And finally, we talked about trend lines and how to draw trend lines. Once again, it's something that is very very subjective, and each person will draw trend lines differently. So this is right now up to you to practice drawing trend lines. So that's it for this course, guys, and see you all in our next class.